Hi, Dipan. Thanks so much for joining in. Well, Dipan, yesterday towards the end of trade, everyone was buzzing about this LTI Mindtree merger. You're going to have a conglomerate now far larger. There could be some benefits as well that will come out there. And possibly may not be in this review. That's the one that happens in February. But in the next review, it could possibly make its way into the Nifty, going by the current data. What's your take on these stocks?
Good morning, Ajit, and thanks for having me on your show. I think the best piece about both the companies is that they were clear outperformers versus their peer group. And consistently, they have been growing at rates about 15 to 20% thereabout. And I think that even the last quarter, when there were so many headwinds, they managed to sustain their growth rates, which is quite positive. And therefore, they were trading at premium valuations. The major issue with both companies was client concentration, especially Mindtree. And that's always the risk factor for a mid-cap company. I think with the merger taking place, one could expect the client concentration risk factors to be addressed. And if they continue to maintain industry-leading growth rates, I think investors certainly will like to go overweight on the combined entity. And as you said, if it finds its way into the various indices, MSCI, Nifty as well, then that much more money will come into these stocks from ETFs and other institutional investors. Generally very positive on the combined entity. And although there are going to be some challenges because of macroeconomic headwinds in US and Europe, but if you look beyond the next maybe 6 to 8 quarters, then these companies can be real fantastic value creators over the longer term, like a 3 to 5 year period.
Okay, well, Dipan, good morning. I wanted your thoughts on some of these stocks that have reported very good numbers. The one that stands out this morning is Greaves Cotton. It's a revenue growth of 87%. And, that electric mobility business has reported the highest ever sales, the Ampere business for them at 33,000 units. I know this is a stock that you've watched in the past. I don't know if you track it currently, but your thoughts on how to approach it now?
Good morning, Sonia. I think we have discussed Greaves Cotton several times on this channel, and it's one of the stocks worth watching. There are very few stocks that you can actually buy if you want to play the EV investment theme. And Greaves Cotton certainly is one of them. And I'm surprised by the kind of growth numbers that they have reported, especially in a highly competitive environment. Mind you, there are at least 10, 12 EV players experimenting with products, and some of them have been funded by private equity, so they have deep pockets and can absorb losses for an extended period of time. But despite that, I think maybe they have a kind of a winner in place. And certainly this company needs to be tracked. I think underlying business also is good because overall economy has moved up and consuming industries also have done well. Valuations, I think, are still reasonable. And I think if they're able to sustain these kind of growths, especially if the EV business evolves pretty well, then you may see the stock getting re-rated. Do keep in mind that they have set up a massive capacity for EV, which can quickly be put to use depending upon the demand scenario and the success of their products.
The moves have been so large on Greaves Cotton, but I just looked at a slightly longer term chart on Greaves. Prices are where they were back in late 2014, so it's, but in between, of course, a lot has happened, so one cannot ignore that. Dipan, what do you make of all this news flow? I mean, from US tech companies, the latest, of course, is Amazon, 3% of workforce, 10,000 people. You heard from so many others before. What does it mean for IT services companies here, if anything at all? Does it darken the outlook?
I don't know. I heard from someone in the IT services industry that's positive for them and should lead to more and more offshoring, because all those jobs which they are lost over there, some of those functions can easily be offshore to Indian companies. So I don't know how these things will actually work out. And I mean, if you see the numbers of all the IT companies this quarter, what the industry has been consistently saying is that there are now more and more, the IT spends are non-discretionary. Larger portion is coming from companies which have to spend on these IT projects or maintenance, without which the businesses will not run. And maybe that's a new kind of a scenario for these companies as well. And I think that may even increase in terms of IT spending going forward as well. So I'm quite positive on software companies. And I said, I think once we have some stability globally and we are kind of have some kind of a end point as to when these recessionary and macroeconomic headwinds are going to end, and when the actual cycle of spending starts to revive, then these companies are very well placed to take full advantage of that. And as I said, I think offshoring is becoming more and more mainstream, and that certainly benefits Indian IT companies.
Okay, all right. Dipan, request you to hang on. We're going to be talking to a chemicals and pharma company.